I think that $2,000 gold, $3,000 gold, these are reasonable numbers that we will experience in not too distant future.
Hey friends, thanks so much for tuning in. We have a very exciting call with Keith Neumeyer, the CEO of First Majestic Silver and the chairman of First Mining Gold Corp. We're going to talk all about silver, gold, and manipulation. But first, let me welcome Keith. Keith, how are you?
Oh, very good, Sean. Good to chat with you again.
Good to chat with you too, sir. I wanted to point out something important. President Trump has decided to target human trafficking and make it a focal point of his administration. Once he tackles that, I sure would like to see him turn his attention against the precious metals manipulators. Wouldn't that be nice?
Well, he talked about it in his campaign, about the markets and so on, but he seems to be focused elsewhere.
Well, may I read something to you? Because I think it's very important. It sounds like a broken record talking about the manipulation of the precious metals year after year after year, but my friend Turd Ferguson sent me this, and I want to just read this to you if you don't mind. It's called A Lesson in Suppression. You ready?
Sure, go for it.
All right, listen to this. Now, this is our friend Turd talking about the manipulation that occurred just this past Wednesday and Thursday. Listen to this. If COMEX digital metal prices were back down today, solely upon easing war fears, I think we'd all be relieved and fine with it. But when you realize that yesterday's market was simply just the latest act of the criminal banks, you might feel otherwise. Again, we've written about this a million times. Check the charts too. Note the amount of volume it took to move price up during COMEX hours versus the amount of volume needed to maneuver it back lower on the Globex. So, in the end, it's just another chapter in the sordid history of bank price manipulation and suppression. Well, not even a chapter really, just a footnote. Instead, as this has all taken place in just 2 days, price was ramped up on heavy volume Wednesday, only to be shoved back down to Tuesday's level on light volume Thursday. See below. And what is the primary tool the banks use to accomplish this? Their untethered ability to create from thin air as many new COMEX gold contracts as necessary, literally at a moment's notice. In this latest example, the banks created a whopping 32,161 contracts on Wednesday. This increased the total open interest by nearly 6.5%, and it represented 3,216,100 ounces of digital gold, or almost precisely 100 metric tons. 100 metric tons, Keith. I'm sorry I had to read that whole thing to you. I think it's very important.
Well, but this has been going on for years, and it was a little bit disappointing, the action of yesterday. We had a great Wednesday, and then all of a sudden, yesterday came along, and it was like just basically giving everything back. And today, here we go, Friday, and the metals are up again. So there's really no sense in this market. The metals, silver price, gold price, they're in an extremely tight trading range. I think it's quite interesting because I think it's the base that the metals are building right now. This base is now 3 years in the making, and when the metals finally take off, which they will, I'm sure, this year, it's going to be quite astounding to watch.
Well, gold has been showing some strength, I think, and silver, it seems like the same old story. Before we turn our focus really here to gold in this conversation, I want to ask you about silver. Unusual to see J.P. Morgan build really the world's largest hoard of physical silver, isn't it? I mean, what's going on there?
Well, I read the stuff, and it's just such a big number. It's hard to believe, quite frankly, and I don't know how anyone can accumulate such a large position. But if it is true, it's pretty amazing. But look, any bank wanting a long position like that, they're doing it for a reason.
Yeah, and I think the reason is that physical silver is very difficult to come by, and it's worth a lot more than $16 or $17 an ounce. But again, we sound like a broken record, and the story begins to sound trite after a while. After years and years and years of this, the general public just chooses to ignore physical silver, and those that are paying attention start to get brainwashed into the idea that, yeah, it's only worth $16 or $17. But I would defy anybody listening to go to the local antique store, go to the local pawn shop, go to Target or Walmart, try to find an ounce of silver. It's not out there. Go dig in your backyard and tell me how long it takes you to find an ounce of silver. The fact that you guys can mine the stuff and pull it out of the ground, and the smelters can turn it into a beautiful shiny coin for $16 still just defies my belief. I'm seriously stunned every time I get silver in the mail.
Well, you should come down to one of our operations and actually see what it takes. The amount of people, the amount of equipment, the amount of energy, the work involved, and then of course the refineries and the smelters. There's a ton of energy being used and a ton of just sweat and energy that gets consumed by putting an ounce of silver together, and what we as miners get for it, what people get for their price of silver, their ounce of silver is just extremely low, and that's probably why J.P. Morgan is so long the metal, if in case that's factual, because banks like J.P. Morgan, I don't think J.P. Morgan's had a losing trade in multiple years. I did a presentation this past summer where it showed J.P. Morgan's trading over a 5-year period, and it's quite astounding that they could have multi years of not losing a single penny on their global trading. So if they're long something, that's what you probably want to be buying.
Well, you got that right, and they do have a remarkable trading record, but it's not that hard to understand when you know they front-run the market. They control the markets in so many ways, and they know which way sometimes the trades are going to go. I think particularly as it pertains to precious metals. Guys, Keith Neumeyer is the CEO of First Majestic Silver and the chairman of First Mining Gold Corp. Keith, let me ask you this. The gold-silver ratio right now stands at around 80-1. That's incredibly rare. In fact, it's only happened 4 times in the last 50 years. Why the huge disconnect? I mean, what can they honestly be claiming would put silver at such a low value to gold?
Well, I just think there's a view in the institutional space, that there's the economy's rolling over, and so copper prices have been under pressure, and the short position on both copper and silver have been increasing quite dramatically, a lot over the last several months. Interestingly enough, the commercials are actually long silver right now, and the hedge funds are at record short positions. So there's a little bit of a battle going on in the silver space right now. But the hedgies are definitely driving these markets lower, due to their view of China slowing and the world economy slowing. So, even in the case of First Majestic, our short position on First Majestic is the highest it's ever been in the company's history. So there's definitely a view out there that the economy is slowing around the world, and the short position on silver and other metals have been increasing.
All right, as it pertains to gold, though, we still see nation states hoarding gold. Russia is now showing off its gold hoards, hoarding so much gold now that I think officially it's almost rivaling China. And when we look at the top 10 institutional holders of GLD shares outstanding, we see Ray Dalio over at Bridgewater at number 5, and he's adamant about owning gold, saying he who doesn't own gold knows neither economics nor history. And then we have Jeff Gunlock, who manages the $100 billion fund at Double Line Capital, making presentations about tech analysis for gold, being that it's due for a $1,000 breakout. That would put us well over $2,000 an ounce. What would that do for the industry and for gold sentiment?
Well, we've seen, we lived through that in 2010 through 2011, and those are pretty exciting years. And, a good mining stock will far exceed the movement of the metal itself, and stock like First Mining would absolutely explode in an environment like that. So it's hard to predict the exact prices that stocks would do in such an environment, but it would be quite a bit different than it is today. And I buy into that. I think that $2,000 gold, $3,000 gold. These are reasonable numbers that we will experience in not too distant future.
I know you don't have a crystal ball, and so many people have gotten this wrong, including economist John Williams, who predicted we would start to see hyperinflation in the U.S. economy in the 2016 range. It hasn't happened yet. Meanwhile, these central banks may have to start raising rates. How close do you think we are to seeing higher inflation in the United States, especially given the out-of-control spending of the federal government?
Well, look, the verdict's still out on what's going to happen, whether we're going into a disinflation or inflationary environment. I'm not really of any particular view. Gold can do well in both environments. The fact of the matter is the governments are printing extraordinary amount of fiat currencies, and that is not going to change. And I think that likely interest rates will have to remain quite low on an historic scale. Whether they're able to move it up another point or so, to try to get some normality in the financial markets, who knows? But nevertheless, the stage is set for higher gold prices due to the amount of money being printed. I'm of the belief, that Jim Rickards, talks about, of the major reset where, the governments of the world will need to get rid of their debt by fixing everything to the price of gold. And I think that's why governments like China and Russia and other governments around the world are accumulating gold, because they know what's going to happen over the next several years. And of course, the United States, Federal Reserve keeps things very quiet, but nevertheless, I think that's where we're headed.
I occasionally get this question from listeners who will email me and are curious, and I feel for them. I feel for all of us who may find ourselves in debt. They ask, is there a possibility of a debt jubilee? We've heard that talked about by some prognosticators. Do you think it's in the cards at all? Could there ever be a debt jubilee for the people, or would it only be a debt jubilee for the banks?
Well, I think it would be for the government. It'd be hard to justify them to give it to the banks or the people. It's interesting enough. Going back to my earlier comment, if there was a reset in the gold price, for example, we wake up one morning and all of a sudden gold is $10,000. I would almost bet that, I would bet actually that the governments would tax the gain of any gold holdings of its citizens in order to try to collect as much as that gain as possible for their own accounts. And of course, they would be able to eliminate their debts because of the new value of the gold price. But I would doubt whether they would let the average guy on the street benefit from such a move.
Yeah, it may be wishful thinking. Again, though, we've got to really take seriously the fact that in 1988, the Rothschild Economist cover featured a phoenix rising from a burning pile of fiat. And on the cover it said, "Get ready for a world currency." And that projection was in 2018. And here we are. It's 2018. And it does seem like fiat currencies around the world are only losing value, whereas gold in physical form, silver in physical form, hold their value over time. Drop an ounce of gold in the ocean, 100 years, it's still an ounce of gold. Drop a dollar in the ocean, and it's gone in no time at all. Do you own physical gold yourself, Keith?
Oh, quite a lot, both physical gold and physical silver. I've been traveling extensively over the last couple of months, and I haven't been able to purchase my usual annual supply. I generally purchase my physical metal in June. Probably your listeners know that June tends to be, historically the low for the metals during the year, and it's not exact science, obviously. Not every year is exactly the same, but if you go back 30 years, it's an interesting chart to look at. I posted it on my Twitter account, I think about a year ago, so it is available for people to go and look at that chart. But I will be a buyer, this June, as I always am.
Well, let me ask you this then, as it pertains to First Mining Gold Corp. You've purchased millions of shares on the open market. You believe in the company. You can tell us about the company and why you believe it's of value. But let me ask you this. In gold production terms, is gold production peaking? Because the chart from Bloomberg shows Q1 of 2019 as being the likely peak for gold production, and then a 50% reduction by 2024. That's a staggering statistic if it proves true.
Yeah, look, I don't really think it matters, quite frankly. When it comes to mine production, it really is related to investment, and there's been a lack of investment in the mining sector for a long time, and we're seeing production of metals. Look at silver, for example. We've had now 3 years of consecutive production dropping. I was just at the Silver Institute's presentation yesterday in New York, and the analyst there, was showing the slide showing that we're producing less silver today than we did last year and the year before. And that's a function of investment. And you never know whether, if you start increasing investment today, whether that's going to turn around and you start all of a sudden producing more silver. But I can pretty well guarantee that, if there was, $5,000 gold or $150 silver, which are numbers that, I think are reasonable numbers that we can expect to see over the next, several years, that, production would likely go up. But also at the same time, demand would be going up quite dramatically as well, taking up any kind of excess supply that, the miners could potentially produce. If you look at silver, that, if we expect to go green and do everything that we expect to do as a human race, we're going to need a ton more silver. So we better cross our fingers for the miners to be producing a lot more silver a couple of years from now than they do today.
Yeah, well, and congratulations for being able to weather the storm and build these successful companies despite these manipulated prices. I mean, that's the bottom line. And when people in this country do start to turn their attention back to physical silver and gold and see the value of it for their own portfolios, that's going to be another peak demand nexus point. That'll be an inflection point when people really see the need to buy physical silver and gold. Right now, so many people are really brainwashed into ignoring the metals as barbarous relics. I think it's a big mistake. I mean, look what's going on in Venezuela, Keith. Look at the price of silver if you hold Venezuelan dollars.
Well, gold is not considered money by the big institutions, and that's where the misunderstanding of gold is. And gold is the granddaddy of all currencies. And once that is realized by the institutions on a worldwide basis, then gold will become part of everyone's portfolio. Today, gold is not part of your standard normal portfolio. And when that changes, that's where there's going to be enormous demand for the metals. So, we talked about supply in the previous question, and this is where it doesn't really matter what the supply is, because, we know that right now there's no one long the metal other than really the central banks and some sophisticated investors like myself and, others that can see the future. At least we think we can see the future. But once that all changes, the demand for the metal is just going to be so high that it's going to maintain the prices at much, much higher levels for, decades and decades to come.
All right, now I want to ask you this, and in the interest of full disclosure, guys, I own a handful of First Majestic shares, and I own some First Mining Gold Corp shares. So let me ask you this. The last time we talked about the present value of the Spring Pole project for First Mining Gold Corp being worth close to 4 times the entire market cap of the company. That's insane. Do you want to talk about that?
Well, sure. And that's just the one project. There's no one that's done what First Mining has done. I'd say that with some pride, obviously, because I'm the one that instigated the acquisition phase that we are in back in 2014, 2015. And the prices of these companies that, were pretty good companies that spent tens of millions of dollars on their assets developing some of the best gold projects in Eastern Canada, were sitting there trading at pennies on the dollar, and in most cases were basically almost bankrupt. They couldn't raise money. There were, the hate of the mining sector was even worse than it is today. The valuations that we witnessed were, gold ounces in the ground trading at sub $10 an ounce. And, my technical team put together a list of assets or companies, and we started targeting those companies and meeting their boards of directors and convincing them to become part of a larger group, a larger team, led by myself. And in most cases, we were able to convince these management teams or boards of directors of these companies to merge with us and join us as partners to develop these assets in the future, because they were tired. And in some cases, in the case of Spring Pole, it took 20 years to get the asset to where it is today. So, this is, and that's not uncommon. So, we were able to buy, these core 5 assets in Eastern Canada, Spring Pole being the one of us, for pretty incredible prices, as I said, sub $10 an ounce. And that couldn't be done today. Even today, despite the fact that this market is, particularly not robust. Gold prices are obviously higher, silver prices are higher, but the equities are still languishing, but they are higher today than they were back in 2015. So, ounces in the ground today are trading at, 3, 4, 5 times what they were back then. So, the timing was impeccable. So what we have now is likely probably the best portfolio of gold development projects there is out of any junior development mining company that I know of. And now the focus is to develop these assets. And Spring Pole being the biggest, we're focusing a lot of time on it, trying to get it permitted. And it's a long process to get that accomplished. But this is going to be a big, big mine. It's going to be one of the largest gold mines in Canada, and we're super excited about it. But we've got Goldland, which we're currently drilling. We've got Cameron, which is a huge land package. We got Hope Brook. We got Pickle Crow. All these projects. It's hard to say when they're going to be in production, because it's going to take time and money and exploration and development. And and of course, preliminary economic assessments. There's a bunch of stages that need to be accomplished to get these into productions, but I'd be willing to bet that each one of these 5 projects will be producing mines in the next 10 years.
Well, and again, what's stunning about the Springpole story and the story of the company in general is the fact that the market is valuing the 25 company assets you have, including Springpole, at around what, 250 million Canadian, something like that. Meanwhile, the Springpole project alone, according to the economic assessment, is worth 800 million Canadian. I mean, how is that possible? And at what point does the market start to reward you for the hard work you've done?
Yeah, it's interesting because, if that project was in one company, it'd probably be valued differently. But I think, the crux or the position that First Mining is in is it's got so many assets. The analysts or maybe even the investors have a challenge trying to put a value to it because they're just so, it's complicated. There's just such a large portfolio. But, look, I understand this perfectly. We know what we're doing. We know how to change that. And it's just simple. It's just a matter of de-risking them and continually spending money on them and eventually proving to the marketplace that these assets are, in fact, what we think they are. And that takes time. I've done it before, and we're in the process of doing it again.
The other thing I want to point out, too, is that, you and I talked when First Majestic and so many of the mining company stocks shot up just a couple years ago. I mean, shot up hundreds of % in 6 months. And the point that needs to be made is that when mining shares come back into fashion with Wall Street and the fund managers, these things just shoot through the roof really quickly. And they have the ability to do that sometimes without warning, don't they?
Well, they do. And, think about the size of the silver market for a second and why things like that happen. We have, the miners produced around 800 million ounces of silver in 2017, and use $17 an ounce, let's say, on an average. What's that? $16 billion dollar value of the entire silver market on an annualized basis. That's smaller than most market caps of the big high tech companies in the U.S. So if the institutions want to come into the silver space, because all of a sudden their view changes, they want to cover their shorts, or they even want to go long the space. All of a sudden, silver prices can just rocket higher, and that's what we saw. We saw silver going from the low $13 range in January of 2016 to almost $21 6 months later in July of 2016, and First Majestic went up 500%, as well as several other companies as well performed similarly. So this is what happens in the mining space, and it's fun to be part of. But unfortunately, you never know when it happens. You never know when that switch turns on. You never know when the institutions decide, okay, well, we've had enough of chasing Apple and Amazon and Facebook, and we're going to start buying real assets again and start looking at the mining space. We know it's undervalued. We know the institutions will come back to this market. We just don't know when it's going to happen.
Before we round out the conversation here, if people want to learn more about the Springpole project and First Mining Gold Corp, can you shout out the website and just give us a little bit more info? Tell us how people can learn more.
Well, sure. There's an interesting article just written on Crush the Street. People can go to just www.crushthestreet.com. There's a good article there. And, of course, our websites, firstmajestic.com, firstmininggold.com. My Twitter account, Keith_Neumeyer. Go to that. I don't do a lot of tweeting, but, there's some stuff there as well. I think investors, when they're looking at making an investment in public companies, it doesn't matter if it's the mining space or not. They should always look at what the insider holdings of the company are. And, when I do it, it's quite shocking often that I see boards of directors and teams of management don't own a single share. The only compensation they get is their salary and possibly some stock options, and yet they never buy stock, and they actually don't even own any stock. And companies like that I don't even bother investing in, because I want to be investing alongside management. And I think that investors that are out there, and particularly in a very speculative space like mining, should follow the same guidelines as I do.
Well, and I want to just round out the conversation by talking about ownership, too. I know that Reporting Insiders purchased a large number of shares in the last financing for First Mining at around 80 cents Canadian. You bought a bunch at that price. Now people listening can get in far cheaper than even that.
Yeah, no, it's from a buyer's perspective, I love buying at these prices. From a shareholder perspective, I don't like looking at the current price because I think it's extremely undervalued, and it's down substantially from where it was 18 months ago. But look, if the stock keeps at these prices, I'll buy more, and that goes without saying. And Jeff Swingoga, our CEO, he's dedicated his first year of salary in buying shares as well. So I'm right beside him buying stock, and it's just ridiculous that the stock is trading here. So as long as it does, as I said already, I'll keep buying it.
Keith, I want to thank you so much for your time. Again, shout out the websites for the companies, will you?
Oh, for sure. Again, First Majestic Silver is just simply firstmajestic.com. First Mining Gold is firstmininggold.com, and then my Twitter account is Keith_Neumeyer. And of course, don't forget to look for that article on Crush the Street.
Very good. And again, AG is the ticker for First Majestic, and the tickers for First Mining Gold Corp are FFMGF in the United States and FF on the TSX. Our guest has been Keith Neumeyer. Keith, thank you.
Appreciate it.
All right. And guys, thank you so much for tuning in. We very much appreciate your support. Check us out for real news 24/7 at sgtreport.com. Have a wonderful week ahead. God bless.
Five, 10 years ago, man, we were on an island. Now there's hope all over the place. I mean, really, this thing is coming down.